Good morning, ladies and gentlemen, and welcome to this live trading webinar. I hope everyone is doing well so far. Maria Julia said, good morning, Maria. Mogiol, good morning, Mr. Theo, and everyone. Good morning, Mogiol. Larry, thanks for joining us. Good morning, my friend. Ibrahim from South Africa. Good morning, Theo. Good morning, everyone. Good morning, Ibrahim. Roland, good morning to you too. Mladen said good morning. Good morning, Mladen. And of course to everyone else, ladies and gentlemen, just to make sure everyone understands that this content is for general information only and is not intended to provide any trading or investment advice or any kind of personal recommendations. So if you haven't noticed yet, we have the weekly fundamental analysis in the format of podcast. You can find it on our website under the analytics session. And of course, for new traders here, please make sure you download your Admirals mobile application from the Google Play or the App Store. Now let's check the charts. And let's start with the pound against the US dollar. So, Ever, good morning and welcome. Ruben, Dario, good morning. Theo, good morning. Ruben, Mr. Carlos, thanks for joining us today. Good morning, Carlos. Anil said good morning. I think first time I read the name, Anil, so welcome to our webinars. Joshua, greetings from Tanzania. Thank you for joining us. Joshua, Argo, good morning and welcome to the webinar. Ibrahim said, downloaded the application this morning. That's fantastic. Nick, how are you doing? Good morning, Theo, and everyone from Nick. Mandas said, good morning, Mandas. So finally, we will start with the market analysis, and that's the daily chart on the pound against the US dollar. The price has this tendency to trading on the lower levels, but if you go on the weekly chart, you will notice there is a tendency for higher highs and higher lows. The 9 and the 20 period moving averages on the weekly charts, or sorry, that's the 10 and 40, not the 9 and the 21. Just to double check. Yeah, that's the 10 and 40. Exponential moving averages. These are the two EMAs I use. And why I use the 10 and the 40 EMAs on the weekly chart, because are the equivalent of the 50 and the 200 moving averages or exponential moving averages on the daily chart. And when there is a crossover between these two moving averages, it's very strong. And if the 50 crosses above the 200, or on the weekly chart, if the 10 crosses above the 40, that what we call golden cross. And if the opposite occur and it signals a strong bullish sentiment and bias in the market, then if the 50, if the 10 crosses below the 40, so the blue crosses below the red moving average, it's the death cross and it signal bearish bias. So if I zoom in, you can see that the price last week rejected at the 10 moving average. That means there is a strong tendency from the price to push higher. Now, on the daily chart, of course, the lower the time frame we move, the more detail we see on the chart. So here we see the development of this downtrend. Now, there are two scenarios. either the price will break above without showing any false signal, but if the price shows any false signal around the downward trend line, it leaves the trader with a question mark. So what should I do now? And these are the times maybe we, either if we have strong bias and we want to trade in the direction, let's say to buy, we better understand that there is a chance the market to keep trading lower, because maybe some sellers are waiting here from this downward trend line to execute sell positions. So if we want to trade, I will not suggest, I will say what I would have done. I will reduce my trade size simply. If I want to trade something that there is against a strong tendency on the one time frame, I'll better reduce my trade size. Ibrahim asked to have a look at the DAX. We will do that. So Vanessa said, good morning. Good morning, Vanessa. So next one, euro against the US dollar. Yesterday, the price came very bearish and closed below the low of the 2 days ago candle. And today we see already the price is trying to gain some of the losing momentum from yesterday. Scrolling down to the 4-hour chart, there is more detail. It's been since the New York session yesterday. Price is slowly moving higher. But again, to talk about any bullish trend, we must see at least a new high, at least above this high here. So we want to see a higher high. When the currency, when the markets are in a transition period, guys, it's hard for a retail trader to apply technical analysis, high probability strategies. Honestly, it's not something. Don't think that you are unable to read the markets or you lack knowledge, trading knowledge. Absolutely not. If it's not clear, it's not there. Okay. If it's not clear, it's not worth risking our hard-earning money. What for? Australian dollar, US dollar. We talked about the weakness of the Aussie. Although yesterday buyers, they were extremely decisive at this price level, and they tried to push the price higher. So today on the 4-hour chart, there is a clear double bottom, as you can see. Combined with positive divergences on the RSI indicator. And that's bullish. X-Man said, good morning to you, Theo, and to all others. Good morning, X-Man. William said, good morning, Theo, bit later, but still academic quarter. something like this, William. Radov said, good morning, all. Welcome, Radov. G Cobra X, that's all I read here. Good morning, Admirals. Good morning, Cobra X. And Nog said, good morning, Anog, and welcome to our webinars. Vanessa asked for gold. We will have a look at the gold, of course. Sonir Konstantin said, good morning, Sonir. New Zealand against the US dollar. Price tapped again at this level of support, and it looks like it has a bullish tendency and a bullish bias. For now, guys, I was keen to trade this after we see this lower low. It was only a tradable opportunity, in my opinion, at this point here with the QE, but regardless, it doesn't mean a tradable opportunity. It's also clear for us to trade it. We have to be very specific and detailed when we are about to execute a trade. So please pay attention to the detail, to the levels, to the price action, and to the reward to risk ratio. Next one, USD JPY. Weekly chart indicates bullishness because the moving averages, they are crossed on a golden cross from this point here. Since then, price remains above the moving averages, and that's bullish. RSI indicator, for those who like to look at the indicators, RSI, it's above 50, and that's bullish. So weekly chart, based on the indicators, it has a bullish sentiment. Daily chart makes higher highs and higher lows. It's obvious on the chart. So traders can look for buying opportunities if they want to trade with a trend. USD Canadian dollar. Last trade I was in this one, it was from this bullish engulfing down there. Took profits few days ago at this level here at around 1.338 something, and market maybe calls for a retracement correction. Here you can see the market left with this tail rejecting the higher prices. USD CHF, I'm still in the trade. Honestly, I didn't take profits. This is the 61.8%, and that's where I had my target from this bullish engulfing down there, and I'm waiting to see if I will get something out of this trade. For now, the US dollar, it's a bit uncertain, except the US dollar JPY, in my opinion. Euro JPY, I told you a few trading sessions ago, guys, that at this point here, we do not trust the price action because the sell orders highly, most likely they are sitting at this area here. So we can see the market, if the sellers, they become strong, market can reach all the way here, price action, and then it can print a rejection. So we can trade it to the downside. But for now, I'm on the sidelines with this. The room of opportunity was down here at this support. But again, this bullish engulfing printed 400 pips. I mean, with 400 pips, with an ATR close to 170, it's like almost 3 times the ATR, the average true range. So why to get involved with a low probability in terms of reward to risk? Guys, yesterday I did a webinar for those who participate, and thank you so much, about trading psychology webinars, and the subject, it was very relevant to what I just explained, because in our trading plan, we must include the risk and the risk management rules. We cannot only include on a trading plan how to enter the market. We focus too much, traders, they focus too much on the strategy, and I'm sure many of you identified a strong level of support, and then you find a good price action to execute, but that's not enough. If that was enough for trading profitability and trading success, you would have been successful so far, right? At least most of you who trade for 5 months or 1 year, because you are doing the same thing over time. You are looking for the same catalyst. You are looking for the same market condition. But look at this here. An ideal price comes at support. It's a bullish sentiment, or maybe this is a range and you identify that's the bottom with false breakout at this low point here. And then you say, okay, I would like to buy here. I place my stop loss there and I will go for 2-to-1. What are the chances of this market in the next 2 weeks to give you even 1-to-1? There are very low chances. Why? Because this is an overreacting price, and it's almost 3 times higher than the ATR. The normal price move range, it's about 100. Now it's about 150, 190. But at this point here, it was even 170. So if on the trading plan, there is no such a thing as risk management rules, like maybe it's going to be a question like, do I have room? Does the price has room to move at least to 2-1 or 3-1? Depends what's your take profit. But if you don't have this rule, it means you're not going to have, most likely you don't have a rule for exiting the market. So how can anyone make money without exiting the market? Most likely traders, what do? And that's a great lesson for you guys. Most time traders, they behave like this. They have an entry point, they buy here, they have a stop loss there, price comes up, it makes 2-to-1, even 3-to-1, and they say, okay, it's going to go unlimited, I'm going to buy a new house. And then price comes here, they get scared, and they hope for a bounce upward, and it comes there, and then, okay, yeah, everything goes well. It's going to go to the moon. It's going to make a new high. They just don't understand, don't pay attention to what actually the market is doing right now. They pay attention to what market did here, but we are trading here, not there, guys. So at some point, price comes here, and then traders, they have only 2 options. Based on their fear of not losing money, they're going to either close it with break even. Based on their fear of not losing money, they're going to drag the stop loss from the MetaTrader below, and they're going to increase their trading size, and a new stop loss will place here. Or they're going to either cancel their stop loss, and they're going to hope for the market to give them at least here, or even at break even, to close the trade. Or if this is not going to happen and they have the stop loss there, they're going to end up taking a losing trade. Why? Because they correctly set up their entry point, they correctly set up their stop loss in terms of risk management, but they miss to set up a take profit and stick to one, and they miss to understand if there is room for the price to move in that distance and give the 2-to-1. There are, regardless, I said that many times, despite we will identify tradable opportunities, the market, maybe in this case here, won't give us the criteria to capitalize on that opportunity. Next one, pound JPY, still price has a bullish sentiment here, as we can see from the weekly chart, and there is a strong level of resistance at this point. If the price will penetrate with 2 days decisively close above this level, then we are talking for a valid breakout. If not, most likely we will read on the chart the traders' emotions, like price will spike up, and with 1 or 2 trading days, we will see a reversal to the bottom, to the downside, and that signals for selling opportunities. So Australian dollar JPY here, was a good opportunity. It's still a good opportunity. Price at support, although it's been compressed by this downward trend line, but it's at support, and buyers came twice to rescue yesterday and 2 days ago. So maybe we're going to see some more explosion to the upside. Maybe for intraday trading, 5-minute chart, 15-minute chart, today it will be a good to keep an eye on the Australian dollar bullishness. 10 minutes for the London Open is worth looking at some indices and commodities. in case you need, you want to do analysis in any other currency pair, please let me know. We leave the DAX for the London Open. So gold on the weekly chart, price is still trading lower. We saw a break of the previous week low, so that's bearish. Daily chart makes lower highs and lower lows. For again, when you see bullish candle, don't be scared. Don't think that market change sentiment and it's bullish now. For the price to fall downward, it has to first go upwards, and for the price to move upward, it first has to correct to the downside. So I'm still bearish on the gold. On the 4-hour chart, price may equal lows, and this can put the price into a trading range. This can put the price into a descending triangle, and that's bearish pattern. But the trending lower highs and lower lows, it's not present anymore on the 4-hour chart. WTI, that was very interesting price behavior from yesterday, because during the Asian and Sydney session and during the London session, the price sold off so much, but it falls break this channel works perfectly in this WTI, and impulse candle, bullish impulse candle during the New York session left the daily chart with a long shadow behind. So it's still bullish, but at this resistance, market didn't made any kind of correction. And as we know, markets ebb and flow, and if every time sellers trying to push lower and the buyers, they step in aggressively, at some point, all these buyers, they want to take some profits out of the table, right? So at some point, we're going to see a sharp and deep retracement. We don't know when it's going to happen, but we can use some tools to identify the weakness in the market. First tool we will use is the horizontal lines to spot some resistance based on the past, and the second is momentum indicators. We can see some negative divergence on the other side, and then of course price action. Silver, lower highs, lower lows, still bearish on the silver all the way to the $22 level. Copper, pretty much similar. It's not that clear, but let's check the weekly chart on the copper. The next support found to be at around 366. Daily chart. There is room for the price to move lower, but since it was very bearish until this moment, we might see some correction. Bitcoin, strong impulse just below the 30,000 US dollar yesterday, from 29 to 30. That was very strong bullish move. We'll see if today it's going to follow through or if it's going to move to the downside. Dow Jones at resistance from yesterday, as you can see here. We are expecting to see some correction, to be honest. Nasdaq was intraday, actually scalping, not intraday, Nasdaq yesterday around the New York Open. And from this point here, I was looking to buy and I bought it. Actually, there were two good trades I took yesterday on the 5-minute chart. Today, what can we say for Nasdaq? On the weekly chart, there is this steep upward trend line. Looks like it's false broken on the weekly chart, but on the daily chart, it looks like it broke valid. Now, which one is more weighted? I believe the weekly chart in case you do execution on the daily chart. But here is the trap. If you guys trade on any lower time frame and your reference time frame is a daily chart, it means the only thing you see here, it's a valid breakout. So it's not, there is no right and wrong thing in trading. There is, as I explained you multiple times, it's a high probability or a low probability, nothing else. So from a long-term perspective, that's bullish, and for the short-term perspective, that's bearish. So if you are trading, let's say on the 4-hour chart, for the 4-hour chart trader, there is a breakout and consolidation, price trying to return back to the mean revision, and at some point maybe to sell again to the downside from a downward trend line. But for a daily chart trader, this maybe it's bullish and wants to see a bullish engulfing to continue buying activity. Platinum price, it's on its way for this level here, 8, what's level now? 889. Still bearish on this one, looking for shorts. FTSE, it's been a while to check the FTSE. Therefore, we still have this trend line here. Bearish engulfing last week, very strong sell-off on the FTSE as well as Nasdaq, as well as the DAX 40, DAX 30, no, DAX 40. Yep. So 2 minutes for the London Open. Let's check the DAX. Daily chart, nice bearish engulfing yesterday, very strong bearish engulfing. Ideally, we would like to look for some shorts. Hourly chart, it has a resistance here on the hourly chart. There are 40 pips for that one. So if I will be looking for shorts, I will place a sell stop order here. Now let's see in the next couple of minutes if some black candles printed on the chart. So we place a buy stop order above the previous candle high. Guys, many questions here. I hope I can answer everything. Ibrahim, I was hoping DAX retested the high before the drop, but it dropped right after yesterday's session. Yeah. Loic said, bonjour, Loic. Thank you so much for joining us. Ibrahim, continue, but it climbed overnight and still push up now. The DYX dropping since Asia session. Yep, spot on, Ibrahim. William asked Theo, when do you enter when you say the bullish engulfing? I enter on the anticipation of the bullish engulfing. If the price made a new low, I will wait for. So guys, I will place a buy stop order above here. Sorry, William, I will come back to that question. Let's focus now on the London Open and see if the price. That's what I didn't like to see. Price tricked me in at 9.59, but I would have any other way to place a buy stop order here, and it tricked me in due to the spread. So let's hope that this candle here, it's gonna. Okay, so at least we got triggered also from this candle here. Therefore, I cancel this order here. Guys, it looks like it's going for 10 pips. Where are the 10 points? It's up there. Let's do some modifying. 10 points almost got triggered on the DAX. Again, we hope that it's going to be a valid breakout and not a false breakout. We'll see how it's going to end up. Anyhow, this is the 1 minute chart. That's a 5 minute chart here. Williams said entry, stop loss, trade profit. You just explained it's something everyone already has experienced. But as you say, Theo, we need to learn from these experiences or lose every time. Very well said. Thank you so much, William. Tumelo, we can check on USD, JPY. We already checked on that. Please, when we end the webinar, you can go back. It's somewhere in the middle of the webinar. You can check it out. So we are waiting for the outcome on the DAX 40. If the price will explode higher or it's going to push backward. Looks like buyers are tired here, huh? I think 10 points. Up, guys, 10 points already played. I had a take profit on the 15 points, as you see, while I was amending the price. So I took 15 points today on the DAX, and I'm very happy, to be honest. For those who are still in the trade, yeah, it's still on the 13 now. So another happy trade today, good trade, and I'm sure we all like it. Still rallying. Whoa, 20 points and still climbing higher. That's fantastic. All right, ladies and gentlemen, guys, thank you so much for your participation in this live trading webinar. I wish to everyone to have a fantastic day ahead. Happy trading if you are around. And I look forward to see you tomorrow at the same time. Thank you so much. Bye, everyone.